Buying a home is already stressful, but figuring out your loan? That's where many people freeze up. One of the most popular choices is the conventional loan, but here's the thing. Just because it's common doesn't mean it's right for you. Let's walk through exactly how these loans work, who they're for, what makes them great, and when they might be a mistake. But before we dive in, hit that subscribe button if you want more no-fluff mortgage advice that actually helps you buy smart. So why do many people choose conventional loans? Here are the main advantages. Lower borrowing costs if you have strong credit. Unlike government loans, most conventional loan pricing gives you better terms with a higher credit score. No upfront mortgage insurance fee. Unlike FHA, VA, or USDA loans, conventional loans don't require an upfront premium. The PMI on conventional loans is cancelable. Once you hit 20% equity, you can say goodbye to that PMI mortgage insurance. Whereas FHA can have PMI from 11 to 30 years depending on the down payment amount. Flexible property types. Whether you're buying or financing a condo, a 2 or 4 unit property, or a single family home, conventional loans can work for a variety of different scenarios. Long-term savings. If you qualify in many cases, conventional will save you more over the long term because you don't have to refinance in order to get rid of your PMI. So if you check these boxes, a conventional loan could be a great fit for your financial situation. But, and this is a big but, conventional loans are not perfect. So let's talk about the cons, the drawbacks of conventional mortgages. First is going to be credit score requirement. You have to have a higher credit score in order to get approved for a conventional mortgage than FHA or other government loans. You're going to need at least a 620 minimum mid-FICO score or higher. Lower scores like 620 to 660 generally require a higher down payment to gain automated underwriting approval, which is generally required. Bigger down payments. While there is the ability to go as low as 3% down on conventional, most borrowers end up putting 5% down or more. Stricter debt to income or DTI limits. Your monthly debt payments can't exceed 49.99% of your gross qualifying income, which can limit your approval amount versus FHA or these other loan types. Conventional is not always ideal for first-time buyers, especially if you're on a tight budget or you're just building your credit. A conventional loan may be out of reach for you. These are important things to keep in mind as we move on to the next part, which is who is conventional actually for? If you've got strong credit, stable income, and you can put down at least 3 to 5%, this is a good option for you. If you're planning on staying in the home long term, the ability to drop the PMI over time is a huge financial advantage so that you don't have to refinance. Self-employed borrowers with more than 5 years in business can qualify on conventional using only the most recent year tax return in most cases. This is very flexible versus government loans, which require a 2-year analysis of your business income, regardless of how long you've been in business. So for these buyers we're talking about, a conventional loan can offer the flexibility and the long-term savings that they need. But if you don't fall into one of these categories, you may want to think twice about choosing conventional. On the flip side, here's where conventional might not be your best option. If your credit's under 620, qualifying is going to be impossible. That's the absolute bare minimum score, 620. If you're working with a really tight down payment, while 3% down is generally available for conventional, it can come with extra conditions and more strict qualifications. If you're early or new in your financial journey, like a first-time or low-income buyer, you may benefit more from an FHA loan, which is designed to make homeownership more accessible. But you need to remember there is no one-size-fits-all solution. It's about finding a loan that works for your specific situation. So there you have it, the good, the bad, and the realistic when it comes to conventional loans. If this sounds like the right path for you, fantastic. But if not, don't worry, I got you covered. Check out my next video where I'm going to break down FHA loans, their pros, cons, and how they compare with what we just covered. And if you found this video helpful, share it with someone else who's navigating the crazy housing market right now. As always, I'm here to help you make smart moves in real estate. Thanks for watching, and I'll see you on the next video.